Hi, this is Lee Phillips. I'm an attorney. Do asset protection stuff and taxes and a lot of things. We talk about LLCs and trusts and all sorts of things. And I always say, this is my line, the first question you ask whenever you move an asset, that's a money, a property, real estate, whatever it is, stock, the first question you ask is, what's the tax? You've got to think. Everything has a tax consequence, particularly moving assets around. Is it a gift? What's the tax consequence? And where I run into it all the time is real estate investors. And they're moving these pieces of property all over the place. They're putting their kids' names on the deed. They take their kids' names off of the deed. They move the deed into an LLC, living revocable trust, whatever it is. There's a tax consequence to all of this. You've got to think, what's the tax? What's the tax? Now, the tax will determine very often whether you do a deal. What happens? When you put property into an LLC, you've got to get property back of equal value, or it's either income or gift to the LLC because you gave them more value than you got back. How do you get value back out of an LLC? What could an LLC possibly pay you? Well, if it's just buying a piece of property, it'll pay you cash. That's what it would do to a third-party seller that they're buying a piece of property from. But for you, you're transferring the piece of property you already own into the LLC for asset protection. You have to get stock, membership interests back in exchange for that. When you give IBM $100 in green, what do they give you back? Well, it's not income to IBM when you give them $100 in green for their stock. You get stock back. You turned your green into blue. And in theory, it's of equal value. You hope it goes up, right? But in theory, it's of equal value. So the IRS says, hey, no foul. You gave them a $10 bill, they gave you a $10 bill back. Pfft, what happened? No big deal. Same thing on your little company, your LLC. And these real estate investors, they're just putting their property into the LLC. They don't worry about it. No, you have to worry about it. You have to do it right. Otherwise, when the IRS comes back on you, you've got a problem. But if you've done it right, it's a quid pro quo. I gave them equal value. Big deal. No problem. So you always have to think, what's the tax? And how do I structure this transfer, this deal, so that I get the best tax consequence? And I've settled many a case where we ask for less than the full value of the claim. And the reason is I structured the settlement so that it came to the individual in a tax manner that was advantageous to them. And we didn't have to ask for full price because we ended up with more money if they would determine that this payment was for this purpose instead of that purpose. Different tax consequences. So always ask, what's the tax? And this is something you have to just learn. Go through life. Every time something happens, you always ask, what's the tax consequence of the transfer of asset or whatever I'm doing? Because I'm sorry, taxes take a big chunk of everything you do. And if we can structure it so that they take less of a chunk, that means you end up with more of a chunk. Good deal, huh? Lee Phillips, my question is, what's the tax?